Hello, everyone. This is Zak Gardezy. I'm the founder of Wealthstone, a private wealth management firm based out of Scottsdale, Arizona. I'm also a certified financial planner and a private wealth advisor. So, here on Money Minutes, I share with you some of the latest market headlines and my outlook for what's ahead. So, for this week's episode, I'll talk about what the Federal Reserve is planning to do next as they meet on September the 16th and 17th. They've announced that they will be soon cutting interest rates, but is that likely? And what does that mean for the economy and the overall market? I'll talk about NVIDIA's latest earnings report and what this means for the company and for artificial intelligence. And then lastly, I'll answer a question that I've been getting a lot, which is what's next for AI? Is the AI story coming to an end? And then what's the next big thing that I expect to be an investment category for clients after AI? So let's get right into it. So, as I mentioned, the Federal Reserve is meeting on September the 16th and 17th. It's expected that on the 17th, Chairman Powell will announce a cut in interest rates of at least 25 basis points. Now, what does this mean for the economy? Why is the Federal Reserve doing this? Well, we have to remember the Federal Reserve has two mandates. One of those is price stability, so managing inflation, and the other is maximum employment. And so, although inflation is coming down, it's still not at 2%, but that's even debatable in and of itself because if you look at some real estate indexes, some that we use prior to what's called owner equivalent rent, which is what we use today to monitor real estate inflation. But if we look at some of the other indexes, real estate prices really haven't gone up around the country in most areas. Actually, in some areas, they've gone down. When you consider this factor and that real estate is the largest contributor to inflation, inflation has likely been at 2% or lower for quite some time. But nonetheless, that's a totally different debate. What the Federal Reserve is more focused on right now is their second mandate, which is maximum employment. So we recently received some pretty negative news. So the Bureau of Labor Statistics, they track job growth, employment, unemployment. They track all of these statistics around labor data. Well, they came out in some instances this year revising downwards jobs data, which basically means, hey, look, I know we announced earlier this year that we added X amount of jobs, but actually we looked at it a bit closer and we added less jobs. And that's pretty normal. That happens every year. That happens multiple times a year, frankly. That's part of the game, unfortunately, with the Bureau of Labor Statistics and jobs data, which is a bit of guesswork because in this country of this size, it's very hard to actually calculate the jobs added or lost or the unemployment rate on a month to month basis. There is guesswork involved. And when there's guesswork involved, they got to go back and revise this information when they figure out they were wrong, whether there's more jobs or less jobs. Now, what has been the big news is that they looked at the data, the Bureau of Labor Statistics, from April of 2024 to March of 2025, and they actually revised downwards 911,000 jobs, which basically means the US added nearly a million less jobs than what we thought. This is the largest downward revision in history. And this means that the labor market is far weaker than even what we thought or what the Fed has been concerned about. This is why the odds of a rate cut now on September 17th is over 90%. And so it's pretty clear, I think, that the Fed will cut interest rates, but not for good reason, right? We wanted the Fed to come out and say, look, we beat inflation. Things are looking great. It's time to start lowering interest rates and ease back into a bit of a lower rate environment, right? That's the Goldilocks scenario and what the market will use to propel itself to much higher levels. What the Fed is being forced to do now is to cut interest rates because of how bad the labor market is looking and what this could potentially mean down the road. Remember, unemployment, which is eventually what this information leads to, is sort of like a leading indicator of future employment weakness. Unemployment is this downward spiral of negative economic effect leading to eventually a recession. Higher unemployment is actually one of the leading indicators of a recession, but I'll explain how. You've got less added jobs than you thought. You've got more layoffs happening because companies, let's say inflation is still impacting them. Let's say the tariffs are impacting them. Let's say immigration policy is impacting some companies and industries. So there's higher layoffs or job losses. This means less consumer spending. When there's less consumer spending, companies make less money, then they have to lay off more people just to make up the difference, right? Or maybe the tariff impact will cost them some jobs, right? And that this turns into this cascading effect, which eventually leads to higher unemployment and eventually less spending and eventually a recession. And this kind of just keeps happening and happening until somebody like the Fed steps in and tries to stimulate the economy. Now, the Fed, which is notorious for making and taking actions later than they should, they could potentially, although some argue they are late now, but they could make a pretty quick decision here on the 17th to cut rates. Will they cut rates by 25 basis points? Is what the market thinks. Or will they cut by an even greater amount to sort of jumpstart the stimulating effect to the economy? And this really ultimately comes down to what the Fed and the members of the Fed think. There were some members of the Fed in the last meeting for the first time in over a couple decades who dissented from the majority opinion and wanted to cut rates. Of course, they didn't get their way, but it's a clear sign that the Fed members are starting to consider cutting interest rates. And even the Fed chairman talked about it himself and saying, look, that's what we're planning to do during his Jackson Hole speech. And so I believe the Fed will cut rates. Unfortunately, I don't think it's for the positive, optimistic reasons, but it is something that the Fed really needs to do, something that I've been talking about for months now. And hopefully they actually do it. Now, from a portfolio management perspective, I believe it's time for investors, at least this is how I'm viewing it for Wealthstone clients, to get a little bit more conservative, right? If you're very aggressive, maybe taking on more risk than you should, it might be time to start paring back some of that risk right now and get back to your original, risk tolerance and risk levels that your financial plan called for. And if you're not sure where those levels are, please reach out to either your financial advisor or reach out to us at Wealthstone. I would be happy to have that discussion with you. So, NVIDIA reported earnings. Now, NVIDIA's earnings report is just about as important these days as the Federal Reserve's meetings and the data that comes out from the government from all sorts of things like inflation and jobs data. NVIDIA is the most valuable company in the world, worth over $4 trillion. dollars. They're the brains behind AI, robotics, autonomous driving, really every leading technology, world supercomputers. They are the brains and really one of the most important companies in the world. And so, when they release earnings, it really helps sort of set the foundation for the direction of the market. Now, I do want to review with you the earnings report data and then what my opinion is of the company and what this means for artificial intelligence. And so, when we look at overall revenue, NVIDIA's revenue is up 6% from the quarter and 56% year over year. Data center revenue is up 56% year over year as well, although the data center revenue came in a little bit weaker than what analysts were expecting. The big news is that NVIDIA projected no sales from China over the next quarter. This has a lot to do with the trade tensions between the US and China, and this is really starting to affect smart, computer chips that could potentially be used by China either to defeat the US in this race to develop the world's best artificial intelligence or to be used by their military or other parts of their government to get ahead of the United States. And so the administration is being very sensitive to the types of computer chips that China gets access to. Now, this is not really a partisan issue because the previous administration did the same thing. However, NVIDIA is now looking at this and saying, look, this is starting to affect our company to the point where we don't think we'll have any sales from China over the next few months. Now, this had a very negative effect on the company. But what does this mean for the stock overall? Well, it's a conservative viewpoint, and it makes sense. The CEO and CFO of NVIDIA want to be conservative. They want to level set with investors and make sure they set the right expectation. But if you're optimistic or even somewhat optimistic and you think the administration can get some sort of progress on trade negotiations with China, whether it be this quarter or next quarter or beyond that, this means that NVIDIA is being potentially too conservative. And if they are, they get some sales from China and their earnings are actually much better than even what they are expecting. So I do have the optimistic viewpoint here. I think that NVIDIA will actually outperform. I think that the White House will eventually come with a deal with China, whatever it is. And this potentially could involve selling more advanced computer chips to China. And the White House has already talked about doing that for NVIDIA and AMD. But then the White House wants to take at least a 15% cut of some of those chip sales. Now, a lot of this is developing, but again, I share the optimistic view for what's ahead for NVIDIA. Their numbers otherwise are fantastic. And then when you look at artificial intelligence overall, it's very clear by how NVIDIA and other competitors in the space, other players in the AI, infrastructure, I am consistently seeing earnings reports just blown out of the water by these companies. And the common denominator is artificial intelligence. Much better than expected, more revenue than expected, and it's growing. And so I'm very optimistic about NVIDIA. And for Wealthstone clients, in many cases, I'm looking at this as a buying opportunity. Again, you have to work with your financial advisor to figure out, do you already have too much NVIDIA exposure? Do you not have any? What's the right amount for you? These are conversations that I'm having with clients and decisions that I'm making as I'm managing their portfolios. But again, everything, in my opinion, seems to look good for Nvidia, despite some of this negative short term news that we're getting with the relationship with China and a small miss on the data center revenue. So as we've talked about artificial intelligence a lot, and it's been the top theme at Wealthstone for last year and for this year as well, and I believe for 2026 too. A common question that I get is, well, what's next with artificial intelligence? Is the AI momentum starting to slow down? And what's the next big thing after AI? I really want to base this mostly off of actual statistics, and then I'll throw in my opinions in there as well. So let's look at usage rates of artificial intelligence. So in the academic setting, 93% of faculty and administrators at more than 300 North American colleges say they expect to expand AI use within 2 years. In the corporate world, 78% of businesses already use AI somewhere in their organization as of 2024. And this is up from 55% the year before. And now 71% of these individuals who responded to the survey rely on generative AI models. 66%, and this is in the healthcare space, 66% of US physicians reported daily use of AI in 2024, which is a jump from 38% a year prior. In the government and defense sector, this is as of July 2025, federal agencies logged 1,110 distinct AI projects in 2024, which is almost double 2023 levels. And then generative AI use cases climbed from 32 to 282, which is almost a 9x increase. Now, when you look at those numbers, it's very clear that generative AI uses and usage rates overall are increasing dramatically, but they're still not at 90% or 100% like we see for some common technology like computers, smartphones, calculators, etc. And in my view, at least generative AI, which is like your chat GPT systems, the usage rates for those should be at 90% or higher across all industries. I mean, if you walk into a business today and they don't use computers or they don't use technology at all or smartphones or calculators, you're probably going to be shocked. Like you're in one of those unique cities that's really classic and untouched, like a historic city, and that's just their style. But in general practice, it's extremely rare to run into a business like that. I think generative AI will be very similar in that respect, where across all sectors and industries, it's going to be very commonly used. And still, we're not there at those 90% plus levels, which is why I think generative AI has a lot of room to run. But beyond that, NVIDIA put out this presentation where the CEO talked about the multiple stages of AI. The next one, beyond generative, is agentic AI. You're starting to hear more about this, but agentic AI is where you've got these autonomous agents that you sort of train who do certain tasks for you. I'll give you an example. Let's say you're in an industry kind of like mine, where you get lots of emails every day from clients, maybe from industry colleagues, and your job is to read through your emails, make a to-do list, figure out what has needs follow up, what needs urgent response, what's marketing and spam and all these different things that requires lots of your time to go through your inbox and figure all this out. Well, in some cases, you have an assistant who sifts through all that information for you, but in other cases, you could use an agentic AI system that does this for you in the background 24/7. So then every time you log into your computer, your emails are already reviewed. You've got a list of to-do, tasks. You've got summaries of important emails, critical things that you need to get back to very, urgently. Just imagine the efficiency boost of that. But that type of technology, which is so obviously useful, the usage rates for that are well below generative AI. I'd argue they're probably somewhere where generative AI was in 2021 and 22, somewhere in the 10-15% range, or maybe that's even being a bit too liberal in the assumption. So when you've got a lot of opportunity for more agentic AI use, that's a lot more runway for AI and companies involved in the space like NVIDIA. Then beyond that, you've got the next stage, which is physical AI. Think of like robots, for example. Think of vehicles that drive themselves. You're starting to see a lot more of that with Waymos and robo taxis, especially here in Arizona. We see lots of Waymos in many of our cities. This type of physical AI system, the usage rates for that are extremely low. I mean, I don't know anybody who's got a smart robot at home other than maybe like a Roomba or a pool vacuum, which is questionable if how intelligent those really are. But in a non-laughing matter, those are basically robots and intelligent. For example, Roomba and pool vacuums, some of those they use computer processors to understand, what they're doing, improve their efficiency, clean faster, get, they're smarter technologies. But physical AI is way, way more, advanced than that. Think of robots that kind of understand you from your chat GPT usage or your agentic AI usage and just do things for you in the background that make life easier for you. We've talked about this before, for example, when Tesla announced their Optimus robots, but think of the senior citizen who maybe lives alone and needs somebody to basically go get the groceries, bring them in, put them in the fridge, take out the trash, maybe help change a light bulb. These are all things that an intelligent robot could do and could make life a lot easier for certain segments of the population. Of course, usage rates for physical AI are basically at near 0%. And so, again, when you factor all of this in and the stats that I laid out earlier, the usage case and the investment case for AI is very strong. I think we've got many, many more years until AI reaches this quote, peak that people are talking about. I don't think we're anywhere near it. Will we get this explosive growth that we've seen, over the last couple of years? That's hard to say, right? Because AI went from not being used really at all outside of the engineering space to now being used by everyone. Anybody in any business, any industry could make use of AI, as I just pointed out, by going sector by sector here. So that's a big shift. But again, I think there are going to be continual big shifts in society and the usage case for AI to where I'm very confident and continue to select AI as a top theme for investors, especially here at Wealthstone. Now, what's next after AI? And this might even occur concurrently, but I believe it's quantum computing. Quantum computing is already showing positive signs of just changing the world when it comes to compute power. Millions or billions of times stronger than the world's best supercomputers today. And so when you factor this in, the blending of science and computers and technology, this is what I believe will be the next big thing and the next big area for people to invest in. However, some of the leading companies in quantum computing are still very small, very risky. And so, depending on your risk tolerance, it may be a little too early for you to get into quantum investing and quantum stocks. But I see this as really the next big thing. It might take a few years to develop, but that's at least what I believe is the next big technology and something I've already talked to Wealthstone clients about. I'm already researching companies in the quantum space and we'll be ready to start investing in those areas when I believe it's appropriate. But I put out an article that talks about this topic on my LinkedIn page. Feel free to check it out. And hopefully this video, you found helpful. And if you have any questions or would like me to review your specific investment portfolio or questions, please don't hesitate to reach out. Thanks again for watching this video and hope you all have a great rest of your week.